Investing for Beginners, Lesson 5, What's a Good Price? Now this is going to depend on the particular individual because everyone is going to have their own opinion on when to sell a stock. But this is what we want, is for you to develop your own style of investing stocks, but around specific guidelines. First, we will go over reviewing your original goals. Then we will go over reviewing the current strength of the stock's company. And lastly, we will go over why selling a stock can be difficult for people, but really shouldn't be if you understand these two things which can cause confusion. The first one is emotions, and how your emotions can play into the selling of a stock. And secondly, taxes. We will go over how taxes can affect a potential profit or a potential loss when you sell a stock. In order for you to review your original goals, you must first ask yourself some questions. What was my original goal for the stock to get to? So as we mentioned before, you set a goal for the stock to increase, say, $10. Has the stock price reached this goal? This is a simple question, and most of the time you should consider selling a portion of your shares if the stock reaches your goal. In the last few slides, we would talk about why you might hold on to a portion of your shares in the event that the stock continues to go up. But it is definitely good practice to sell a portion of your shares once you reach your goal. And the last question you should ask yourself is, how much money could I potentially be making? And as an example, we'll just throw this up on the slide here, and say you buy 100 shares at $10 a share, so your initial investment is $1,000. The stock goes up $10, which was your goal, so now you can sell the stock at $20, and those 10 shares are now worth $2,000. So you have just made a total of $1,000 without accounting for taxes and commission costs. But now that you know how much you could potentially be making and the fact that it has reached your goal, it may be a time to sell at least a portion of those shares. At this point, I would also like to go over the fact that selling involves selling a stock when you are making money, but also selling when you are losing money. In both instances, you must review the current state of the company. If you are making money and have reached your goal, you must decide whether you think the stock will continue to grow or if it has hit its high. Either way, you should consider selling half to 75% of your shares, or else you are being greedy and you may lose out on money if you don't sell and the stock starts to drop. Now, if you are losing money, you have to make a decision on selling it. Look into the current news of the company to see if it's a short-term skid or if the company's stock is declining due to a major issue. Those issues could entail a company restructuring that can cause the stock's price to stay around the same price since the company is working out internal management changes. Another issue could be a lawsuit. The company could be being sued by another company over a patent or something. A lot of times the stock price will stay the same or drop until the lawsuit is resolved. One other issue could be a recall of some sort, like a pharmaceutical company recalling a line of drugs or a car company recalling a particular series of a car. All these issues can take a long time to recover from, so you have to consider selling a stock to cut your losses. It may also be a possibility to buy the stock back at a lower price once the company stabilizes again, and then have it go back up. So it may be an opportunity to sell it before it continues to drop, and then once it is lower, you could buy more shares, and then as it continues to go back up and it has resolved all these issues, you can then make money again. That is assuming that this stock that you have chosen is a very well-known, solid company that can recover from an issue like this. As I spoke about before, selling can be difficult if you invest with emotions. But if you can invest without emotions, it can play to your advantage. One of the keys to being completely unemotional about the money you invest is to only invest money that you are not going to need in the next 3 to 5 years. Now, when you are first starting out, this can be difficult, so do your best to add to your savings while adding to your brokerage account. But sometimes you have to spend that extra money in order to capitalize on a stock that is trading at a bargain price. If you get too emotional, then you might sell before you should. That's why you have to stick to your goals and guidelines. You have to be happy with whatever amount of money you make because there are always going to be more opportunities. Taxes will be discussed in detail in the next lesson, but I will touch on why taxes can affect your decision to sell a stock. Taxes affect when you sell a stock because if you sell a stock after holding it for less than 1 year, then you will pay higher taxes. If you hold onto a stock for longer than a year, then the taxes on a stock profit are significantly less. So, the main thing to remember is shorter than a year and longer than a year. And if you hold on to it longer than a year, you won't get taxed as much. You have to weigh whether selling a stock before a year is worth it due to the higher taxes. But if the stock has the potential to go back down before a year, then you should sell it and take the tax hit. Taxes are structured in this way to encourage you to hold on to a stock for a long time. Because at the end of the day, the stock market was created in order for you to give money through a share into that company so that they can then use that money in order to grow. So if you are buying a few shares 1 month and selling next, that is going to hurt the overall growth of that company. So the taxes are put in place to deter an investor from selling too soon. So, to sum up, the two main questions you have to ask yourself before you decide to sell is, am I making this sale in an emotional state? And also, am I satisfied with the amount of taxes I will pay if I sell now? If you can answer these two questions, then you should be on your way to selling your profits.